Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, February 17th, 2026, and here is everything you need to know as the markets open for today. Let's start with Wall Street. The United States markets were open in the previous session, and the major indices closed slightly higher, but with a very muted tone. The Dow Jones ended almost flat, but in the green. The S&P 500 inched up by around 0.05%, and the Nasdaq 100 gained close to 0.18%, telling you that US traders are not chasing risk, but are also not in a panic. The key drivers remain expectations around the Federal Reserve's next moves, and how quickly it may be able to cut interest rates without unsettling inflation or growth, while earnings and forward guidance are driving stock-specific action. Stock pickers are still rewarding companies with clear visibility on demand and margins, and are punishing those that disappoint on outlook, so selectivity remains the theme, rather than a broad-based rally. Now to some of the big movers. In the latest completed US session, there was no single index-wide blowout sector, but parts of US technology and growth names continued to see buying interest, while areas sensitive to rates and regulations stayed choppy. After-hours flows were relatively quiet, with no single mega earnings shock dominating sentiment into this morning. Overall, the message from Wall Street is cautious optimism, with indices grinding higher, but participants clearly watching every macro data point and every word from the Fed for confirmation. Shifting focus to Indian names trading in the US, the Indian ADRs give a very useful early read for today's mood. Infosys ADRs moved higher by about 3.59%, a strong positive move that signals renewed buying interest in large-cap Indian IT. HDFC Bank's ADR was down about 1.03%, indicating some lingering caution around Indian financials despite the broader risk-on tone. ICICI Bank ADRs fell around 2.05%, showing that foreign investors booked profits or remained cautious on private banks. Reliance's global depository receipt was marginally lower, down about 0.16%, which is basically a flat to slightly negative signal for the stock. Taken together, the ADR picture is mildly negative for banks but clearly supportive for IT, suggesting that Indian tech could open on a firmer note, while financials may see some pressure or consolidation. Moving to Asia, early trade is a bit softer overall. Japan's Nikkei 225, in its latest live indication, is down around 0.2 to 0.3%, reflecting some profit-taking after recent strength and sensitivity to global growth concerns. The Seng index in Hong Kong is marginally lower, down about 0.1%, which shows a cautious but not panic tone in Chinese and Hong Kong equities. The Shanghai Composite's latest read shows a decline of more than 1%, indicating persistent pressure on mainland Chinese markets, whether from growth worries, property sector concerns, or policy uncertainty. These moves together suggest that Asia is in a bit of a risk-off to neutral mode this morning, with China underperforming, Japan easing and Hong Kong drifting slightly lower rather than leading a rally. Now the most direct cue for India's open is GIFT Nifty. The GIFT Nifty futures are trading lower by roughly 0.26% versus the previous close, pointing to a mildly negative start for the Nifty 50. This suggests that the Indian market could see a soft to slightly weak opening, with some profit taking at the index level. However, the magnitude of the move is not large, so the first 15 to 30 minutes will be critical in telling whether this is just a shallow dip that gets bought, or whether sellers manage to build momentum. On the global macro and geopolitical front, the overarching framework remains the same. Markets are still anchored around the inflation and rate cut narrative. Cooling inflation in the United States and other developed markets has kept hopes alive that central banks, especially the Federal Reserve, can start cutting rates this year. But policymakers continue to stress a data-dependent approach. Any fresh remarks from Fed officials that sound more hawkish or more dovish than expected can quickly shift global risk appetite, so bond yields and the dollar index remain important dials to watch. There were no new disruptive geopolitical shock headlines overnight that directly changed the India story this morning, but ongoing conflicts and supply chain issues continue to act as a background risk for commodities and global trade. Turning to the Indian market backdrop, the last completed session in India had already priced in some of this global optimism, mixed with caution, and local traders are now watching three things closely. First, how foreign institutional investors position themselves after the recent move in global yields and US equities. Second, whether domestic institutional flows continue to provide a strong buffer on dips. And third, whether the Reserve Bank of India's recent commentary on inflation and liquidity is seen as supportive or restrictive by equity markets. As of now, there is no fresh market-moving RBI or SEBI announcement on F&O trading that fundamentally changes intraday strategies for today, so the focus is squarely on price action, sector rotation, and flows. Let's talk technicals for a moment. While exact support and resistance levels can vary across different brokers, reports, traders will be closely watching yesterday's high and low on both Nifty 50 and Bank Nifty as the first intraday trigger zones. A sustained move above yesterday's high, with strong volume and market breadth, would indicate a continuation of the uptrend and could invite momentum buying. Conversely, a break below yesterday's low, especially if it comes early in the session with weak breadth, can turn the tone defensive quickly and shift the mindset to capital protection. For Bank Nifty in particular, the way leading private banks and key PSU banks behave around those levels will likely decide whether financials lead or lag the index. In the commodity space, crude oil, gold, and silver are all sending important signals for equity traders. WTI crude oil is up about 1.31%, indicating some firming in crude prices, which is a mild negative for an oil-importing country like India if the move sustains. Gold is down roughly 1.58%, and silver is also lower by around 1.63%, suggesting that some money is rotating out of safe haven precious metals, usually a sign of a slightly more risk-on stance in global markets. Natural gas is a touch softer, which matters more for specific energy and chemical names than for the broader index. For Indian equities, keep an eye on whether crude continues to edge higher through the day. If it does, oil marketing companies, paint stocks, and other energy-sensitive sectors could react. To wrap up with an actionable day plan, think of today as a session where discipline matters more than aggression. The cues from US markets are mildly positive but not explosive. Asia is a bit soft. GIFT Nifty is pointing to a slightly weak start, and commodities are mixed. That combination usually calls for traders to reduce position sizes at the open, avoid chasing gap ups or gap downs, and instead wait for the first clear trend to emerge after the initial volatility settles. Focus on sectors with the strongest global or ADR cues, IT on the positive side, and banks on the cautious side, and keep strict stop losses because global narratives around rates and China can change intraday. Stay tuned for the evening wrap, send in your questions, and subscribe to this podcast to hear US every day.